Good morning, everybody. Forex market video analysis back in your life. Wednesday morning today, and we got to talk about the Canadian Japanese yen. We have an unfinished business with the Canadian Japanese yen here as it begins to come to push forward after it's been on the back foot for a couple of days. Let me take you back to the beginning, how everything started here. We were calling out the Canadian Japanese yen as it was hitting the bottom, the strong support of 98.08, and as it was turning around, we pulled the trigger with the intention to go all the way up to 102.02. That was our target. That was the official target and final destination. We also knew that we were facing an obstacle at 99.94. Things went well for the first couple of days. Price was pushing forward as expected, but didn't close in on the target. Roughly around the middle of the range, it turned around pretty aggressively. In a single day, it basically dropped back below 99.94. That was not a very good sign. However, we stayed in the position for a couple of days. And then we noticed that price action was pushing forward and actually was successful crossing over 99.94. So we were, hopes were back up at that point. But then yesterday price action came off pretty strong, and yeah, it stopped us out. By that time, we moved our stop loss level to the entry, so we got out break even, right? We didn't take any damage on the way out. So it was easy for us to jump right back in today, but the question is, why did we choose to jump back in, right? Why do we still have that bullish conviction in place? And I'm going to try to explain that from a technical standpoint, of course. So, looking at that range, right? This is a short-term cycle we're talking about. This particular sideways movement began around late April. And we've been able to record a few legs so far. Check it out. We had the first, second, all the way down. That was the third. So basically, we were trying to play out the fourth leg back up to 102.02 as part of this, back and forth exchange that we have in this trading range. And price action, again, made halfway through and started to go south, right? Now, if you measure this move from bottom all the way to the top and apply a Fibonacci correction, I would advise to place the last one, 76.4, which represented by this blue dotted line, right? That defines the last, line of potential correction. So beyond that point, there's no longer correction on this move. But as long as it stays above that level, then officially it is a technical correction, meaning price action should be back on the upside again, resuming the original upside move, right, that began right here at 98.08. And that's going to be considered as one leg with a technical correction in between. You see my point? Because if we can take a look at the previous leg, for example, right? Leg number 3. Leg number 3, you can break it down to five separate waves, right? So we also had some technical corrections along the way. Only this time, it's been deep, right? The correction went all the way to the very edge. That's why it's much more profound. But we still think that the conviction is still on, right? The bullish conviction is still on. That's why we chose to jump right back in, reactivate this position again, bullish campaign, all the way back to to our original profit target, 102.02. We're gonna still use that one obviously, and we have our stop loss level, new stop loss level, of course, at 97.50. All right, so as long as price action keeps pushing forward, we're good. Now, we're probably going to start increasing the position size the minute price action begins to cross over 99.40, just to be on the safe side. All right, so hopefully we can get to the target with at least a 25K. Yeah, that's gonna be good for us. All right, so let's see where this takes us. In the meantime, we'll say goodbye, moving on to the next one. So see you there.